But thank you so much for coming on today. I mean, I've been so excited about doing this with you, because after our conversation a couple of weeks ago, which left me feeling really knowledgeable and informed, actually. It was really the way that you answered the questions that I had. I just felt it was really concise and succinct. And the way that you explained everything was just really easy for me to understand. And I really left the conversation feeling quite empowered about the information that I sort of got from you. And obviously when we run our teaching courses, we have so many delegates later on, they email in or they message in and they ask us about things like setting up a limited company, or, you know, how to get started, how to set up and things related to accountancy. And rather than sort of try to answer their questions, we thought what better than to get an expert on, so that you can sort of share your knowledge and obviously advise us with regards to all matters relating to business and accountancy. And I know that you are a dental and healthcare specialist. What makes that different from sort of any normal accountancy? Is it, you know, is what made you want to sort of deal with us?
No, it's a great question. Thank you for the kind words. I really appreciate that. So that's really the ethos of Heathfield Green is talk to you in a language you understand. So I mean, I qualified as an accountant a while ago, and I went down dentistry more guided by my wife. So my wife's a dentist, and I saw how much, well, the lack of education she had, and how much it was stressing her out. And then sort of understanding more about her sort of the dentistry, the wider dentistry, the fact that almost straight out of foundation year, you're sort of dropped in at the deep end, and you're it's pretty much, it's not sink or swim. I mean, you're going to make a lot of money, but then it's no one's preparing you for what comes thereafter. And then the journey dentists take, I think I remember reading a statistic that 1 in 30 will open some form of their own practice, be that a squat practice or purchase into a practice. So the income and the trajectory one can take is quite steep and quite narrow, in that you get there quite quickly. And that really takes some of the teachings that I had when I qualified. So I worked in large corporate firms, dealing with sort of billions of pounds worth of revenue. And the only way you can do that is by doing that monthly. So being proactive throughout the year, because there's no way you get to the end of the year and try to work out what it all is. So I took that mindset and applied it to people like yourself. That says, if I work with you throughout the year, it puts your information at your fingertips, so you know exactly where you're at. You can shape the year as it unfolds, but also we can make decisions as they're happening. And also you can save money in the long term as well, because when most people leave it to January the following year to do their self-assessment, but then you're trying to work out what you did 18 to 20 months ago, and you're going to miss things. And we run it all through our software proactively throughout the year. So we take a live feed from your digital bank statements, so we can see things as they're happening. And then one of the questions that I get asked quite frequently is, should I be self-employed or should I be a limited company? But it's not always that cut and dry. There's quite a few considerations you have to take there. But to answer your question as to whether, so it's not like endodontics. You don't have to do a specific qualification to be a dental accountant, where the path that I took ultimately means when Rishi Sunak comes out with his big red briefcase, the rules change. And then what's specialist within that is I have to learn what affects my client base. And then there's the added complexity of things like VAT, working with sort of healthcare, things like that, as well as working within the NHS, and then what that means as well. And then some of the nuances with buying into dental practices and running either squat practice or an NHS practice. By being a specialist, it means I can offer a wealth of sort of a better service to my clients. But fundamentally, it means if you're asking me a question, the chances are every one of my other clients is going to ask me the same sort of question. So I can upskill myself and focus on a very narrow sector. So I think it results in a better service. Yeah.
So a little bit of background. So I contacted you, didn't I? Because I wanted to know a little bit more about VAT, especially with regards to sort of as you approach that £80,000 threshold. I was getting mixed advice with regards to whether I needed to be VAT registered, you know, whether my treatments were I needed to apply VAT to them. So I reached out to you to contact you about that, and obviously I left that conversation really clear as to what my next steps were. So this is the reason why I wanted to set up the live, just because I know that we have lots of delegates. I know that we have lots of other doctors, dentists, nurses on here who are sort of in the same boat, and it's quite easy to get close to that £80,000 mark, within the first few years of practicing, be it if you're working part-time or even full-time. You may be already part-time employed on the NHS, and you might be doing aesthetics part-time only. So let's get stuck in with some questions, if that's okay. We had so many people email and message me with a load of questions. I genuinely don't think we'll get through all of it, but we'll get through as much as we can. And if there's enough, if there's enough people wanting another live, we could always jump on and do another one at a second stage. So let's start with, what is actually the difference between a sole trader and a limited company? What is the difference between the two? And, can you be both, or is it one or the other?
So it's a really good question. So by default, we'll sort of take the dentist journey. So you've completed your foundation year, you were employed, so you would have had a salary at that point, and then come September, you're then an associate. So once you become an associate, either you're working for a large corporate and you're going to take a salary, which neither of these things matter to you. But when you're an associate within sort of normal circumstances, your default position becomes self-employed, so which is sole trader. The tax on that, and again, not to get into too much detail on it, but up to £50,000, you're taxed at 20%, and then anything thereafter, you're taxed at 40%. Once you get over 150k, you're then taxed to 45%. But on top of that, there's national insurance as well. So up to 50k, you pay 12% national insurance. Then anything over that, you pay 2% national insurance. So the best way to think about it is, up to 50k, I'm paying 32%, and then over 50k, I'm paying 42%. There's some tax-free thresholds at the start, which say the first £12,500 you earn is tax-free, and then the first £9,500 is exempt from national insurance. But there's a massive asterisk on that that says, for every pound you earn over, so for every £2 you earn over 100k, you lose £1 of your tax-free allowance. So once you get to 125k, you've lost your 12.5k tax-free allowance, which is then taxed at 20%.
So so if you're not setting up a limited company, are you automatically a sole trader then?
Yeah.
I see. Okay.
Yeah. So unless you specifically set up a limited company, then then by default you're a sole trader. And then the tax years run April to April. So the 6th of April 1 year to the 5th of April following year. And at that point, you do sort of make the decision that says, well, if I want to operate as a limited company, what are my options? So straight line, you save money on your tax. It's as cut and dry as that. However, there's some added considerations. So when people say I am a limited company, that's a misnomer. So a limited company is a separate legal entity. So Bilal is a separate legal entity to Bilal Limited. So I would be the shareholder of that company. So I've invested in that company, and then that company does whatever it does. So let's say in this case it's dentistry. So I'm the director of the company. And then there's something called, there's quite a lot of legislation that has to go around it. So there's a lot to consider that says there's a bit more paperwork, there's a lot more admin, but there's a lot more hand-holding required from an accountant's perspective that says that you don't want to get stuck in certain ruts and sort of mistreat the form of what you're doing, because then you end up falling foul of HMRC's rules, which we never want to do. So you have a responsibility to run that company on behalf of the shareholders. So the director of the company, if I'm running it, is me, and I then draw a salary from that. I have to run the company on behalf of the shareholders, which is also me. So there's a bit of a part and part there. So the way your income then comes out of that company, and this is the biggest question that I get asked is, right, I've set up a limited company, how do I get my money out of it? Because when you're a sole trader, everything you earn in the year is taxed. Once you pay tax on it, it's all your money anyway. With a limited company, it's different. So the tax advantage is by giving yourself a very small salary. I'm not going to give away that number because that's something we calculate and we put a lot of time into. But you get a small salary, and then beyond that is anything thereafter. So I've got some numbers set up here that says just how it works. So if I was to say £70,000, so on £70,000 worth of income, the reason why I picked £70,000 because there's an Instagram post I'll put out there, so the numbers are consistent. You would pay taxes, and then you'd be left with 46-ish K. And then with a limited company, the limited company earns 70K. You take a salary, and then the company's got to pay corporation tax. So that's a separate tax. So the company pays corporation tax, you as a person pays income tax. So once you've paid corporation tax, whatever's left over at that point becomes distributable. That distributable income goes to the shareholders. So much in the same way that when Apple makes all its money, paid all its taxes, you get dividends on the shares you buy when you buy Apple. It's the same premise.
And that's a dividend, so that you would get paid a dividend. And then the person who gets the dividend, me, because I'm the director of my company, I then pay tax on that.
Correct.
Okay.
Yeah. So the dividend goes to the shareholder, not the director, but because they're the same person. So the director gets the salary, shareholder gets the dividends. So which in your case is the same person. So when you do your self-assessment, so you've still got to do a self-assessment, by the way. So once you've done your self-assessment, you put your salary on there, and then you put on the dividends you've received from the company. Now that combined position on 70K worth of income, I'm assuming after expenses at this point, by the way, you would save 3.8K in tax.
Oh, okay.
Yeah, it's just straight line. You save nearly £4,000. Now it's not as cut and dry as that, because there's some legal implications that you've got to think about first. So there's something IR35, which is probably an Instagram live on its own, but IR35 usually for small practices that are under 50 employees, it doesn't even come into it. But with dentists and facial estheticians, that's easy for me to say. It's normally outside of IR35, because you get to define the work that you do, who you see, and so we sort of sidestep that consideration. And then it's how you take the money out. So you've got to run payroll, and there's a bit more admin, and then there's more cost with your accountant to do that. So that's where the biggest consideration, and that's assuming you take all the money out, where the bigger saving comes into it, and what really drives my question that says, well, what are you trying to achieve? So in the same example, if you decided not to take all the money out of the business and you wanted to take a sort of a tax advantageous amount out, which meant you stayed under the 50K threshold, because the taxes then jump up quite significantly. So in this example, you take out up to 50K, your saving actually increases to just under £7,500, because there's still £8,500 left in the company. So your company's made the profit. It's distributed an amount to you that's kept you at 50K. There's still £8,500 within the business. Now people then ask, well, what do we do with that? Well, the question is, what are you trying to achieve? So if you're then trying to buy a practice or invest, or you're sort of doing a longer term investment into a squat practice or something like that, then you can invest into that.
Or clinic.
Exactly, or a clinic, or property is a popular one. So that's quite a popular option that my clients do take. So you're then saving nearly £7,500 there. When you start factoring in things like company cars, and if you take an electric company car, you're then saving nearly £10,000. So there's some considerable savings to be had, but it all depends on the individual person. So it depends on your status. If you work for a large corporate, they could determine your status and says, we will not work with limited companies. You have to stay as you are. And they make the distinction for that.
And that would be the same with individual clinics as well. They may not want to pay the company. They may want to pay the person. So you would need to speak to, I mean, especially if you're a subcontractor, or you're working for, if it wasn't your own clinic, and you were going in and working in other people's clinics, you would need to determine that they'd be happy to pay. And I would say generally most people are actually, they don't really.
Well, the clinic owner or the practice principal is incentivized to pay you as a limited company, because if it costs them more money to pay you sort of employees' national insurance, so they're incentivized to work with you on that, because then they save money on it as well.
So I mean, it sounds like it sounds like a lot more work, and you could see why some people may do their own accounts if they're self-employed and a sole trader, but obviously a limited company, it sounds like there's a lot more work to it. I mean, does that make a difference when it comes to accountancy fees? Is it more expensive to obviously for in terms of cost, like if I came to you as a sole trader versus a limited company, would I be charged more as a limited company for you to run my accounts?
Yeah, and it all depends on the complexity in the work. So your price is given. So certainly when we price up, we understand you, so we get to know you as a person, what you're trying to achieve, and then we price you accordingly. But then generally we lock that price in, that says that price is then monthly. You pay that as a direct debit, and you consider our service as almost like a membership. So you're incentivized to draw down against that knowledge. So when you've got a question, reach out to us on Instagram, on text, WhatsApp, put some time in our diary, things like that. So on my bio in my Instagram page, my calendar, everyone's got access to that. So I make a big point of saying if the space is available, use the time. So it's that's what it's there for. So there is more costs, but there's considerable more savings. But the reason why there's more costs is because there's more work involved for us, more compliance work.
And if you can you be employed and have a limited company at the same time? So
Correct.
you can, but you just can't be a sole trader and a limited company.
Well, no. Well, yes, you can.
Oh.
So there is a hybrid position. Now, the main consideration when moving from self-employed to limited company, the tax savings are fantastic. Yes, they are.
Mm-hmm.
However, you lose your pension scheme.
Yeah.
So
if this is in relation to dentists working.
Correct.
Yeah. So this is related to dentists.
Specifically dentists. Yeah. So if you currently enjoy a NHS pension scheme and that you want to stay within that because it is a fantastic benefit, you would lose that going to a limited company. So, but then that's sort of the larger consideration to consider before you take that step. Okay.
And so let's talk about VAT. What exactly is VAT, and who has to pay it? And can you claim it back, and is every treatment vatable?
What is it? Well, it is. So VAT stands for value added tax. So you mentioned before £80,000. The threshold's £85,000. So it's a minefield. So the taxes, VAT is almost more difficult to step around than income tax because it's really straightforward. There's quite a lot of subjectivity with that, which HMRC doesn't like. So we work really hard, and this is why working with a specialist is better, because we work really hard on applying the rules to you specifically and your industry specifically, especially with sort of aesthetics and dentistry. Yep. So VAT, value added tax. It's billed as a tax on consumers. So it's not a tax businesses pay. You're technically meant to pass it on, but it doesn't work that way because prices are led by the market. And if one person is charging VAT, the other person isn't charging VAT. If it's £100 for the service, then no one's going to care if it's inclusive or exclusive VAT. They're just paying the £100. So from a end user's perspective, they pay the tax on it. And it only kicks in once your vatable income, this is quite a key point to remember, so once your vatable income exceeds 85k in any 12-month period. So you've also got, you've got to forecast it as well. So if you...
And does it kick in automatically or
no.
Oh, okay.
So you've got to register yourself, and you've got to register a month before you think you're going to hit it. Yeah. People have been caught out in the past where they probably thought they can get away with it, or assumed someone's going to tell them, and then they get hit with the VAT investigation. Like there was one recently where a client reached out to us. Well, someone reached out to us, and we decided not to take it on because it was under heavy investigation, and they had done something quite wrong, and we wouldn't get involved in that. Okay. But ultimately, they were looking at something like £50,000 worth of backdated VAT, and then a 28% fine on top of that. Yeah.
Wow, that's a...
Yeah, you're incentivized to get it right first time. So very annoying. Yeah, it is a very annoying tax.
We're seeing a very annoying tax. Yeah.
He's not wrong. But I think the one consideration there is it's a tax on consumers. But I think that's the way the government builds it. But you could sort of one day, if you're under the 85 threshold, charge £100, and then the day after charge £120. Ultimately, your prices you charge are led by the market, or what people are prepared to pay. Now, this is quite an interesting subject because it's one I've looked into quite regularly. I've put an Instagram post out on it, which is again designed for people to engage with. And that's what a lot of the content is about, that says we're not trying to give you advice because we have to know your specific circumstances. What we're trying to give you is the information where you can lead the conversation with us. That says, right, well, this is what it means to me, and well, what does it actually mean to me? So reach out to us. So with that, I mean, I'll take some direct wording, and I'll take wording specifically from HMRC's website, and I've got it here in front of me. It says, we are therefore content to accept where cosmetic services are performed as part of a dental treatment, then there is a single supply of exempt healthcare. So where cosmetic dentistry is performed outside of any healthcare, it is standard rated. So if you're performing cosmetic dentistry outside of healthcare, then you've got to pay 20% VAT. Okay.
And what about facial aesthetics? If you're performing facial aesthetics, I mean, are any facial aesthetics treatments exempt from VAT?
So we take a step deeper into it. So it says the definitions of medical services and which services performed by healthcare professionals are exempt from VAT. The services have to be performed within the profession you are registered to practice. So someone has to be suitably qualified, and you have to be performing that in the service you're doing. The primary purpose is of the service is the protection, maintenance, and restoration of health to the person concerned. Now, if you're going to inject Botox to prevent bruxism, then absolutely VAT exempt, because that is clearly a medical treatment in the prevention of sort of further damage on the teeth. Where some of the distinctions come from is where people have, if you're a salon if you work in a salon and you do facial aesthetics and you're over £85,000, you're absolutely going to have to charge VAT. You're going to have to pay VAT because you do not meet the criteria. If you're someone that's suitably qualified, and it's geared towards the prevention or preventative care, and that could be mental care. So that could be someone who's really down and depressed about what they're doing. Now, if you can prove that, then that's fine. So we work with HMRC on that. So we work with the VAT investigations that says they want to see their paperwork. So they're going to say, did you make a clinical diagnosis beforehand? Yeah. What steps did you follow to ensure that happened? Now, that clinical diagnosis can only happen from someone who's suitably qualified. And then it has to be on a CQC registered site, because again, that elevates the status that it is a medical procedure and it's not an aesthetic procedure purely for just making someone look good for whatever reason. Because as long as you can link it to a health underlying health condition, then you're VAT exempt. Now, the other thing to consider here is if you said you're £85,000 total combined income, but of that £85,000, only £40,000 is purely cosmetic.
Yeah.
Then it has to be that element that exceeds 85k before you charge VAT. So if you're at £300,000, but only £20,000 of that is purely, you do an odd day at a salon for someone that just wants Botox and fillers or whatever it is, and it's purely cosmetic, you can't link it to underlying condition, then that technically tops up towards your VATable income.
So my understanding of it is if you are suitably qualified, you are having a comprehensive consultation with the patient, you're diagnosing their problem, you are making a treatment plan, carrying out the treatment, obviously to protect their health or whatever medical condition they have in addition to that, plus you are reviewing the patient and you're seeing them on a CQC registered premises, then in theory, your medical history forms, your forms and everything, all of that, you could argue that actually it is exempt from that, and actually you'd have the paperwork to back all of that up, and you'd be fairly safe, versus somebody who is doing sort of a sketchy consultation, working in a beauty salon, and is just doing lots of sort of Botox with very minimal consultations and reviews. Then you probably would be looking at doing needing to be VAT registered. However, that said, if that's only a small portion of your job, your day-to-day job anyway, it may not reach the £85,000 threshold anyway. So it's about splitting the treatments.
Correct. That's exactly that, and that's where, so going back to your earlier question, was the benefit of having an accountant is we work with you on that. So the software that we use right at the start would have all that in there that said, if you're claiming this as an exempt, I would want to see your documentation that said. So there was a case, I'm not going to name names because I don't want to get myself into anything libelous, but the reason why that failed the tribunal case is because they had sketchy paperwork and it was not on a CQC registered site. And that's one that gets referred to quite a lot in the wider media when people search online. And what I've done is ultimately I've gone straight to the source, which is HMRC, and said, well, what is it telling me? In the UK, we work very different to America. So we look at the spirit of the law as opposed to the letter of the law. America is if you can get around the letter of the law, that's why law is probably a massive profession out there. But in the UK, it's very much the spirit of the law. Is if you came under that investigation and you've done everything you believe was right, then you shouldn't have anything to worry about. But if you're really trying to blur the lines yourself and thinking, well, should I, shouldn't I, always err on the side of caution, because ultimately it's that income that has to then exceed 85k before you then go start charging VAT. It's not sort of the be all and end all, because you pay the difference up to, so when you charge VAT and you claim VAT or you pay VAT. So I don't know, let's say for instance, you're going to buy a bit of equipment for £10,000 that's potentially going to have sort of £1,600 worth of VAT on it. You pay the difference up to HMRC.
Okay.
So if you've had to charge out £10,000 of VAT, but you've incurred £2,000 of VAT, you pay the £8,000 up. So there's still that, yeah. So it's the difference that you pay up to HMRC. So you as a company, any VAT you incur, you knock that off the bill and pay that
I
up.
see. Okay.
But this sort of adds an additional layer of complexity where you've got that split. Is you've then got to keep your record keeping tight that says this equipment was used for the VAT exempt stuff, so I can't claim the VAT on that. But this is the VAT. This is the stuff that I used for the stuff that I charge VAT on, and I can reclaim that. So this is where having an accountant is really important, that we set the right processes up at the start to do that.
Okay, so obviously you would set all of that up, and it would just be a process for example, for me to follow, and I would there'll be a way for me to keep both incomes separately as well as equipment and things like that. So, I mean, could you do? I mean, is that something you could do by yourself, or does it just make it trickier and harder?
No, you could do it yourself. There's nothing stopping you. But I think the time it would take you to do it, you could be offering out treatments, and then that you're offsetting. So it's the time value of your money that says if you've got a packed diary, you've got to block out a week to do something, whereas you've got, and that sort of indemnifies you slightly, that says, well, I've got someone looking after that for me, and then we know how to apply the letter of the law. We know how to apply the expenses that you can claim and you can't claim. So generally that's why you would use a specialist more than anything else, is ultimately it gives you peace of mind, because the biggest thing we do is almost like an insurance policy. You never want to actually have to use it, but if you do have to use it, it's there, and that's ultimately how I bill my services. It says if we do come under investigation, because technically 1 in 50 people will get investigated, that you don't have to have done anything wrong. Sometimes it's routine. Sometimes you might fall outside of the algorithm's outliers where you will get investigated. But as long as the paperwork's above reproach and it's all there, then you've got nothing to worry about. Sure.
And obviously the paper, I mean, because I think that's what I would worry about the most is the paperwork. And, you know, I think when we had our conversation, you had suggested that, you know, part of your practice is to go through the paperwork and have a look at the consultation forms, the medical history forms, even actually submit them to HMRC, which actually I found very, very reassuring, just because of, I mean, once they're submitted, and I think you're you know, it gives you that sort of that safety net, and then you can just get on with it, can't you? I mean,
exactly.
You know, and then you're not afraid of a tax investigation. You know, you bring it on because you've put all the right things in place.
Exactly.
And you know, I mean, I don't think every treatment that I do is exempt, but I would say that based on what you've said, and the way that I conduct my treatments and consultations, I do think that actually, and I do think a lot of practitioners, a lot of doctors, a lot of dentists, nurses will fall under that. So yes, it's definitely a conversation worth having with you. And I mean, for me, it was really worthwhile. So based, and what about things like skincare? Because I mean that's very grey, isn't it? But though some skincare can be prescribed for treatment for conditions like acne, melasma, you know, is it the same thing in that sense, where you've properly consulted the patient, and presumably not all skincare is VAT exempt, and you have to make that distinction?
I'd say that really comes down to the circumstances, but I would say when it comes to sort of things like, because dermatologists, for instance, when they're applying skincare, then no, it wouldn't be. But again, it depends on what you're doing. So we go back to the services are within the profession in which you're registered to practice. So as a dentist that's GDC regulated, are those services within the profession you're registered to practice? Probably not, is what I would say. But again, it's worth delving down that path. But I think it's always worth erring on the side of caution in that sense, because we look at the tests that they would apply, and that would be applied at a court of law that said, were these tests satisfied? And I think in that case, if you're a dermatologist, then I think you'd be completely fine. But if you're a dentist, then skincare, probably not. Then once that all tots into that income, your total vatable revenue, and then once that exceeds 85k, then it all gets plus VAT.
Yeah, that's interesting. I mean, I suppose if you've done further training in specialist fields or specialist or special interest courses, that you could probably argue that you are able to make a diagnosis.
Correct.
But then again, yes, I definitely wouldn't want to be treading on toes of dermatologists, so I
No.
shouldn't be making, I wouldn't be any making those sorts of diagnoses. Okay, fine. Well, the other thing that I wanted to talk to you about were things like expenses. I mean, I've been doing, so obviously since the lockdown, I've been doing a lot of sort of treatment planning at home and online consultations, you know, and what sort of expenses could I claim, or you know, would I claim expenses?
Yeah.
Could I claim expenses for those things? Because I've gone from working in clinic 4 days a week to working from home three days a week. So, and I feel like I have incurred expenses in doing so.
Yeah. So it's an interesting one. So again, why you would use an accountant is ultimately we know what you can and can't claim for.
Yeah.
And then, so just going back to something you mentioned earlier that I've noted down that I haven't addressed is, could you be both self-employed or limited company?
Yeah.
Just to address that one, yes, you could. You could absolutely do that. So you could have all your NHS income paid into your self-employed.
Yeah.
So you benefit from the NHS pension scheme if you're a dentist,
yeah.
and you absolutely want to do that, then that's fine. That's really the only reason why you would do that. Whereas, and then all your private income you'd put through a limited company,
Yeah.
if there was a specific purpose for that money. So let's, again, go back to the example, I always want to understand what you're trying to achieve. So if it was for a specific purpose, say for instance, I don't know, you want to, again, it's the same principles at play. You know, what are you trying to do with that money once you've done it? Because once you've bought it, once you've put that money in, so once you've generated that income, what do you actually want to do with it? Because if your goal is to take it all out, then you're going to end up paying way too much tax. It's not tax efficient at all to do it that way. So if your NHS income, for instance, is 60k,
Yeah.
and you're going to put all your private income through a limited company and take it all of it out, then it's pointless. You're going to pay too much tax. Whereas if you were going to live off your NHS income and invest your private income into whatever you want to do, be it a practice, be it a clinic, set up a squat practice, properties, futures, derivatives, watches, wherever it is.
Bitcoin.
If you're going to start Bitcoin, well, yeah, it is. Bitcoin's actually one I'd say put in your self-employed because of the volatility of it. So, but that if you were going to do futures, derivatives, shareholding, stock holdings, anything like that, then do that through a limited company. Whereas if your goal was to take it all out, then don't bother. Yeah. Expenses is a good one. So that's it's a neat little segue. So through limited company, you can actually gift yourself 6 gifts a year of up to 50 quid a gift.
I know.
So you can do that, but that saves about £250 worth of tax.
Amazing.
And then you get to claim that as an expense through your limited company as well, and you can do that per employee. So if you've got 3 employees, each one can get £300 worth of gifts. So 50 quid each that per year. So it's fantastic. The definition of an expense is something that's been wholly incurred in the pursuit of business. So if by working at home, you've had to go buy a printer, you've had to go buy a laptop, you've had to go buy stationery, you can claim all of that. You can also claim the workspace you're working from. So if you've got, say, I don't know, 100 square foot house and you pay £100 a month in your mortgage payments, you can attribute that square footage as an expense. Things like your broadband are expenses, but you've got to be quite sensible in what you say you claim. So you can't claim the whole amount if it's running the kids' TV, the Netflix and everything like that, but you can claim a proportion of it.
A proportion of it.
Yeah. So you can generally take the same rule of thumb that says, what are my total living costs? How much of my square footage am I actually using for work, and how much time am I actually working from home? So this last year is prevalent, so it's fantastic. So I know a lot of people that have built home offices. And I generally mean built home offices, so beautiful home offices in their gardens. But technically, it's all an expense because they have to do that work. There's other tax implications that we consider, but generally, yes. If you've incurred the cost and you can't avoid the cost, then it's generally then you can claim the expense for business use. I mean, things like the accountancy fees are expenses. Your GDC fees, your indemnity are all fees. Any materials you buy are all fees. Or expenses, sorry, anything like that you incur by doing business, then yes, company cars is a fantastic one. So
one that I really want to get onto you about, actually, because I've always been told that. I mean, I always understood that you shouldn't have, you shouldn't expense your car, but I think that recently changed with electric cars, didn't it? And so tell us a little bit about business, what's BIC stand for? Benefit in kind
tax,
and electric cars, because you can offset the full price of an electric car to your accounts, can't you? That's incredible. I mean, I've just gone and done that.
Oh, fantastic. What did you get, out of curiosity?
I got a Tesla, an M3.
Oh, nice.
Yeah.
Oh, very nice. So that's actually a good example. So one of my friends did that. So we were talking about it, and he went and got the Tesla Model 3 Performance, and it's ridiculous. So so congratulations on a like for like basis. So historically, it's a really popular question. Right, limited company, can I go get a company car?
Yeah.
What happens is if you go get let's say for instance you do aesthetics, you've got a limited company, you then go get a branded van that you need to put all your stuff in,
Mm-hmm.
but you only ever used it for work. You never did a single personal mile in it or anything like that. You drove to where you work, you get in the van, that's completely expensible. So you don't pay any company benefit in kind tax.
Sure.
The benefit in kind only comes from when you use it for personal use.
Which if it's a car generally. I mean, a van probably not, but a car you more than likely will be using personally.
Correct.
Okay.
So what happens there is the government give each car a value. So there's a benefit in kind value for that car. So let's say, for instance, I wanted to go get a BMW 3 Series, and the value of that car was £40,000. Mm-hmm. I managed to negotiate really hard with them and get it for £32,000. Government doesn't care. It's the list price of that vehicle. It's not the price you paid, it's the list price.
Oh, I see.
And then what they say is, depending on the car's emissions and everything else, they'll apply 18% of that car's value to your tax. So they add it on to your income and says, right, we're going to tax you on that now. That says,
so you would personally pay that tax?
Yeah.
Ah, right, okay.
So the company doesn't pay it. The company gets to claim the whole expense.
Yeah.
But I, as the user, have to pay tax on that car now. Now, if I'm earning over 50k already, then that pushes me into the higher tax bracket. Then I'm paying 40% on that. Horrible, because technically you're paying for the car twice.
Yes.
But I mean, there's other benefits, things like you get to put the car insurance through, and all the servicing, all the maintenance costs, things like that. However, with electric car, it's the other way around completely. You pay nothing. Yeah. So you pay, in the current year up until April, you pay zero tax. And that, I said that right, by the way, zero tax. So there's a massive government incentive to push electric. So if you were going to go get an electric car, let's say for lease perspectives, so for leasing, you get to put the entire lease cost through. You get to put the cost of the charger. You get to put the cost of the car insurance and any associated costs to get the car itself. And then you pay no tax on it this year. Next year, you'd pay 1% tax, which is like £110. The year after, you'll pay 2% tax, which is like 200 quid. Yeah, nothing. Yeah, for what you're saving. So whatever your lease payments are, you get to put the entire amount through. So you save a fortune on tax. The similar principle applies for sole traders, but it's not done in the same way, because technically a sole trader is the company. The company is a sole trader. There's no company car. You are one and the same. There are still tax benefits for a sole trader. You get to write the car off for its value that you've had in the year, but with the limited company, that's where the savings really start compounding, and they really it's really quite attractive. I'm trying to convince my wife to go electric, but she's not having it yet. Yeah. I've
just seen Tara's comment. Guess who will be looking for an electric car soon? Do it, Tara. It's incredible. I spent the last couple of weeks just looking for one. It's such. I mean, I have one anyway. I love because I have to commute in and out of London and go from clinic to clinic. So I hate paying the congestion charge. So I went and got an electric. But when I found out about this, I upgraded straight away. And I can't wait. I get it on the 1st of March. So I'm really excited about it.
Oh, fantastic! No, I'd love one. I'm trying to convince the missus to get one, but it's ridiculous when you say, well, you can actually save all of this. There's other things to consider. So let's say, for instance, you're going to put like a 5k deposit down. You have to spread that deposit over the year, the duration of the lease. So if it's a £6,000 deposit for simple math, and it's a 3-year lease, you knock out £2,000 a year for that. So you can't put all £5,000 in year one. You've got to spread it over the life of the asset itself. But so I should have bought shares in Tesla before.
I know. Because everyone's commenting now.
No, but yeah, it's things like that that we stay on top of, and then we push that information out because we want you to know it. Because I treat your money as if it was my money. If I could save money, I'd want to save money. But yeah.
So I think there's a comment there actually, which is quite relevant. Someone asked that if they bought an electric car about 2 years ago, can they claim retrospectively?
No.
What if I bought an electric car 2 years ago personally, and then I wanted to sell it to my company? Could I do that? I could, couldn't I?
Has to be a new car. Has to be a new car. Has to be a brand new car.
Oh, right. Okay. So it has to be a brand new car.
Has to be a brand new car. Yeah. If you would, there are ways to offset it against your self-employed income. But reach out to me in the DMs for that, because that's
okay.
quite...
So it's not a complete no. There are ways to and obviously it will be based on personal circumstance. So yeah, you're not here to advise on specific things. But okay, so it's not a complete no then. So maybe there is a way for them to be able to look at claiming that back. I'm quite excited to actually put my insurance and car related maintenance through the company, actually. Something I just don't have to think about.
Look, the biggest thing to that is, if you're a higher rate taxpayer, you're not paying 19% corporation tax, and then you're not paying 32.5% dividend tax, and you're not paying 9% student loan on that. That's a hell of a saving. So that's a hell of a saving. So I think my wife's watching this. Yeah, let's get one.
Look for a Tesla.
Yeah.
Or someone said a Porsche up there. I didn't realise it.
Yeah. Well, I think I worked it out. So that, Porsche Taycan S, Turbo S, I think I worked out you'd save like for like £9,000 a year in tax. So yeah, versus if you got it in your own name or the limited company, you'd save £9,000 a year in tax. Is ridiculous. It's sort of £800-ish a month, or £700 a month.
Mad.
So it's madness.
Yeah, so you all know what to do now. Okay, and I mean, that's the sort of expense side of things, and I mean, and that's a big advantage, because of course if you're doing your own accounts, you wouldn't really know about, I mean, unless you were obviously well read and you've done all your research, and but time is precious, and I really don't want to be sitting there doing research on accountancy related expenses and things like that, when I could be treatment planning or seeing patients. So for me, having an accountant is a no-brainer, because of course I pay the expert to do all of that side and look after my accounts and my taxes and my money for me. But I mean, in your opinion, what are the biggest advantages of having an accountant versus doing it yourself? Because I mean, there will be some people, especially if they're self-employed, they've got a much more simpler setup. They may be doing it themselves. What sort of things do you come across, little mistakes that people may make that you think it's much better to have someone that's experienced and is trained to obviously understand these things?
So it's really interesting. So I'll go through a couple of real world examples. So we get a lot of first year associates reach out to us. We also get people that were associates last year, had their taxes to due, waited until January, and there was a mad dash to do it. So by putting it off, you're going to cost yourself money, mainly because I treat everyone the same way. So my process is, whether you joined in Jan, please don't ever do that. Save yourself the headache and the accountant headache. Don't ever go find an accountant in December. Just don't do it. The tax year ends in April. Do it as quick as possible. And that's where sort of people reach out to me through referrals or however. And first off, they want to know what we can do for them. And then they say, we'll deal with it next year. Well, fine. Okay, you'll deal with it next year, but that's up to you. What's really useful for us is where some clients have come on and made a lot more money than they thought they'd make. And we can advise them correctly that says, you don't want to get stung with tax this year. And also with specifically limited companies, you can't go backwards and change what's happened. And this is where really the value in accountant comes into it, is when people want to go back and say, oh, that's too big a number. But the only way we can make that number smaller now is by doing something illegal. That's tax avoidance. We do not do that. What we specialize in is tax planning, that says, and that's legal. That's an encouraged industry.
Yeah.
Tax planning says, as the year's unfolding, we can make changes. We can modify your approach throughout the year that mitigates your tax, or means you'll pay less tax. Whereas if you get to the end of the year, there's nothing you can do backwards unless you're going to lie. And we don't do that. We get asked to do that, and we say, no, thank you. Go find another accountant. We will not get involved in that. It's not worth it for us. That's where the value in accounting comes into it. That says, and especially the way we work is, we like to buck the trend of sort of traditional accounting. Is you come see them once a year, and they bring, you bring your bank statements, and someone's trying to go through it. It's like brushing your teeth. It's like going to the dentist and trying to brush your teeth 5 times in the morning and hoping it all goes well. It's never going to go well. But if you brush your teeth twice a day for every day, then you're going to have a very easy checkup. And that's probably the analogy that I can use, that says, if you just do it constantly throughout the year, and that's the way we do it. So our software works through it. You get to see it on your app. You get to see it on the desktop. We do the bookkeeping on our side because it's really easy for us to do. And then we nudge you if we don't see things, or if the shape of the year is changing differently to how we set it up at the start. And more importantly is if your family situation changes. So like I said before, if you're going to go through a limited company to save the most amount of money possible, but then you realize, hold on, you're about to get married, you want to start having children, but then you really got to start thinking about, this is for dentists, you've got to really start thinking about the maternity pay, because the benefits are fantastic and they outweigh any tax you'd pay. So it's worth taking the short-term hit for the longer-term benefit, because the last thing you want to be worrying about is whether you've got enough money whilst you're taking, up to a year and a half, 2 years off whilst you've had a child. And that's where the empathetic nature comes into it. It says we'll never come out and say you'll pay the least amount of tax possible, because it all depends on what you're trying to achieve. Yeah. You'll always pay the right amount of tax based on what you were trying to go for. And that's really important for us. And it's that sort of it's almost like coaching, but I don't want to go there because I think that's a whole different sector. But we nudge you along the way, and we hold your hand throughout the process. It says, right, you can't use a limited bank account's money to start paying for your own fuel bills.
Yeah.
Don't do that, because HMRC is called pulling down the corporate veil. If you're operating via a limited company, you treat the money like it's your own. You're giving some here to your siblings, giving to your mum, you're buying your fuel. Then HMRC will say, well, you're a limited company name only, we're going to tax you as a sole trader regardless. So they can do that, and they do that. And we maintain that for you as well. Things like, if you're going to operate through a limited company, the bank, it has to have its own bank account. Now, I've seen clients before where they've had a limited company in their own bank account, and HMRC's gone, no, we're just going to tax you as if you're a sole trader, and it's just not worth it at that point.
I didn't realize you. I mean, I didn't realize you could have your own bank account, but I mean, obviously, that's a really important point.
Yeah. So that's generally the benefit of having that, and having someone to sort of bounce ideas off, because I think generally as an emotive subject, people don't really like talking about their money. But if you've got someone there to talk to about your money, and it's all clear as day, you haven't got to make anything up, is you can have really honest conversations with people. And I think that's really quite helpful, because I, as someone who's completely unbiased to it all, can give you my honest opinion. But generally that's the whistle stop tour. It got quite emotional there, but but yeah. So that's the service that I like to think we provide. And we haven't lost a single client in the time we've been operating. And we're growing quite quickly as well. And I think it's having that honest approach that says, it's your money, I want to put you in charge of it. What do you need from me to do that?
I mean, I know obviously, we've spoken very generally about the whole picture, and you can't give personalized advice without knowing people's circumstances. And a lot of the things that we've discussed are very generalized. It's very general. So if people we've had some more personal questions as we've been chatting, so which I've not asked, because I kind of know what your answer is going to be, but for those people who have got much more specific questions relating to their circumstances, what's the best way for them to contact you, so that you can obviously talk through and answer their questions, because we're out of time now as well also. But what's the best way for people to get in touch with you? And I would encourage you to as well, if anyone's got questions, encourage you to reach out to Bilal, because he's been so helpful. Even though I didn't pay him, I mean, at the moment he's still not my accountant, and he's done all of this for us. You've been so free with the information that you've given me, and this evening it's been wonderful. So if you've got any questions, I would encourage you to reach out. What is the best way for them to do that?
So in my bio, you can email me, you can call me, you can send me a DM. Please follow, like all our content, because that really helps everyone else see what we're about. But feel free to reach out. My diary, so my Calendly is in my bio. If you want to put some time in, feel free to put some time in. I don't charge for consultations, because I like to make a joke about, if I'm giving you this for free, what am I not telling you? And really where my skill set lies is growth. So look, there's accounts out there that I think, look, I will do as good as job to sort of minimize your tax exposure, but it's like, what do we do with your money once you've got it? And that's where our skill set really comes into it. But look, the bio's there. Drop us a message if you want a consultation. Put some time in the diary. I'm happy to have a chat with anyone about anything, because I'd rather you had the right information or steered you along the right path than sort of wandering around aimlessly and being worried about it.
Thank you so much. So my summary of our life is: get an accountant, don't do it by yourself. Some facial aesthetics, actually a good number of facial aesthetics, if you're in the right conditions, is VAT exempt. Make sure you speak to your accountant about that to get all the paperwork in place, and don't just wing it. Get an electric car on the company if you have a company, and it's much more tax efficient for a good number of people to be a limited company, depending on what your income is and your circumstances. But speak to an accountant about that. Thank you so much, Villa. I'm going to save this for anyone that's joined us late, and it's been incredible. You've been absolutely amazing. I'm really pleased that we've done this.
Thank you.
There's so much more questions that I didn't get through, so hopefully we can jump on another date and go through those. And anybody who have personal questions, definitely reach out to Bilal directly. Thank you so much. I'm going to let you go.
Cool.
Thank you so much for giving some of your evening to us.
Thank you very much. Thank you for having me.